Good morning, good morning. Morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ. Let's see if anyone's online this morning. Man, it's a slow night. Hey, Alexander, Jiraj, Ian, how are you? Hey, Rasto. It's a slow night in 7-Eleven. Boy, it's really slow. Hey, what's up, AO? How you doing? How's London? Looks like another beautiful morning in Liverpool. Everyone okay? Hey, Raj. No fireworks. That was in Brazil. Hey, Kevin. Ohio. How is the great state of Ohio? Hey, Joe. Lonigan, how you doing? 27 Fahrenheit, just freezing, so it's just getting into the Christmas weather, eh? Good stuff. Yeah, I saw back home it was, well, back home somebody said yesterday it was like minus 26 or minus 22. So I'll take beautiful Liverpool at 10 degrees. Hey, Brad, how you doing? Hey, Dave. Morning, morning, everyone. Alrighty. Well, we have jobless claims this morning at 8:30, but I think, and I hate to say this, hey, Dave, we're starting to get into that pre-Federal Reserve. Well, that's next Wednesday. Today's Thursday, so Friday, Monday, Tuesday. We got 3 days out, and I'm looking at this on my 4-hour candle chart for the last one, two, three, 4 candles. For the last 4 candles, and I'll bring that over in a second. We are above 68.54 and a quarter. Now, just barely though. And on this chart, we're above 64. It's really slow tonight. Um, Overnight inventory itself is short, believe it or not, because the trading is underneath yesterday's close. So I'd say that's probably 80% short, and now it's just starting to correct, but boy, the correction is slow and nobody wants to buy it. Nobody wants to buy the poor old ES tonight, and there's a reason why. Remember how I said, I'm going to zoom out for a bit. Please be patient with me. And this is something that you guys are going to have to watch over and over again to get it, but you will. Okay? That inventory that we are selling up here, Okay, ladies and gentlemen, that's cost basis is under the cost basis is underneath 6,700, right? Hey Dave, hey Badir. So 6,700, under 6,700, that's where the inventory is priced. We are selling that up here at 68, 65, and it's not like really we have a ton of buyers, right? It's a slow, they don't really want to buy it. Everyone was waiting for this, right? Everyone's been waiting for that. And I've been saying, and annoying the hell out of every short seller in the world, we've seen this happen before, where the market has moved up, moved sideways, and then just when everyone gets short, the market goes higher, which is pretty crazy, right? So now it's all forced buying. Oh, your son is an Everton nut? That's cool. And I live about 5 minutes away from Everton, the new stadium. So on game days, they're all walking by with their blue stuff on. I have yet to be to a game. 68-12 never broke. 68-12 did not break. It didn't break here. It didn't break here. The low's going up. Now we're stuck. Yesterday we trapped a bunch of shorts again. And I know there's no single prints, but here's the thing about charts. And this is what people will tell you. You guys look at support and resistance, right? Do you ever wonder what creates support? I want you to think about this. It's going to help you with your trading. Most people think that support is created by large buyers, right? There you go, Jiraj. Now you're cooking with gas. Exactly, right? No, it's not mechanical buyers. See, everyone has said this mechanical thing. That word is misused. What happens, what creates support? And I'll tell you this from being a market maker and from being a deal guy who creates support. When the sellers who are long here, when they stop selling here, you leave a whole bunch of buy orders here that are not filled. So they're like waiting in line. You know, like the way people wait in line to buy an iPhone, but they haven't got one. That creates support. If you fill those buy orders, the market will drop down, right? So if I came along and I filled these orders, the market would drop down to the next level where there's a large amount of buy orders. Does that make sense? Can you guys visualize that? So in the old days, say we had a bunch of stock here, and this price was, say, $3, okay? And we took the stock from 3 to 7, okay? When the stock sells off, the people who shorted it on the way up are going to be our buyers. So say we get to 5, and you see a whole bunch of these buyers lined up, if you're the person who owns the supply, right? If you're that person, would you sell and fill those $5 bids, or would you raise the price to see if they could maybe pay 6? Now, when you're the only seller, you're going to raise the price. But if you have competition, you will fill those bids and then come back down to maybe 4. Does that make sense? Exactly, Ian. That's why I'll tell you a little secret. Okay. This is something that no one is ever going to tell you. And I'll tell you this now on this podcast, on this YouTube, because I don't show my face, right? The buyers creating support are the trapped shorts. Exactly. And then what happens, VS Squad, is the larger long traders see that they are creating support and they jump on their backs and buy a position, knowing that the trap shorts are going to hold them up, right? Here's the secret that no one will ever tell you. The only way I know this is because I worked for people who distribute stock, the people that we call smart money. You know those people that when you're buying a stock at $20 a share, they got it for half a penny, right? They bought it for a tenth of a penny. So they bought 5 million shares for $5,000. That actually happens, right? Right now I can go and buy 5 million shares of a stock for $5,000 and then open it at 30 cents and I'm already up. That's how markets work, right? So those people taught me one thing. In this business, you want to be the only seller. Because if you're the only seller, you can control supply. That is why you want to do your own deals. You never want to work for other people who have stock unless you really know what you're doing, right? I'm an executing trader, so I do, but I'd never sell somebody else's stock, right? As a promoter, right? You always want to do your own deals because you are the only person with supply. You can control the supply, right? Yeah, I said that to you and our friend in Australia, Dave, because we're taking a couple of companies public. So, Dave, in fact, you will be controlling the supply. Okay. But you're not going to hear that from anybody else, right? And once you know, if you control the supply and you have trapped shorts, everything's beautiful. See, there you go, Ian. Now, that's a great question. Why on slow days don't the sellers bring it down slightly to bring in more buyers? Or if limited sellers, they're happy to just wait. They're happy to just wait, Ian. They're happy to just wait because they see the buy orders coming in and there's enough to hold the market up. And if they're selling 2 contracts every minute, that's fine as long as it's moving out the door. Now, they will bring price down if there's price competition. So if I'm selling at 68.65 and you show up and you go 68.64 and 3/4 and Girage goes 68.64 half, I'll go and sell at 68.64 and undercut both of you. The shorts will see that and they will back. So if the shorts are buyers here and we start selling a lot here, the shorts will move their buy orders down. So that's how this all works, right? If you're the only supplier and the price comes down to a certain area, you just stop selling because you see a whole bunch of buyers. Longer time frames, well, it's not investment time frames in the ES, okay? So in equities, right? So if this is, say, Microsoft, right? The longer time frames control the supply because they are investors and they're holding for maybe 30 years or 40 years, right? And say BlackRock has $13.5 trillion, right? So that's a different story. In ES, those different time frames are wholesale traders. So traders who are long underneath 6,700, traders who are long size here at 6,834, right? They are all different time frames. There are people who are long from 3 weeks ago. There are people who are long from 2 days ago. There are people who are long from last night. And those are the different time frames of people involved in the market. That's why I'm trying to make this video about time frames to help you guys understand who's who in the zoo. But I'm trying to make it, and I'm having some trouble because I'm trying to make it simple. And every time I do it, it ends up getting complicated. So that's why there's a delay in that one, right? I'm trying to make it simple, but I just keep making it more and more complicated. So I haven't put it out yet. Right? It's no use if I put it out and it confuses you. There you go. As a day trader, there's a time frame you should focus on. So that's why I do the same thing every morning, Jiraj, if you notice. First thing we do is we go and look at this chart, right? That's why I have this method that I've been trying to teach you guys, right? So remember the 5 steps? So the first step is to go look at this chart and say overnight inventory is short. Look and see where the inventory is, where it's being sold. Now you know you're in distribution, right? So you're short inventory and yet you are in distribution. Think about that. If you are selling and you're in distribution and your inventory is short, shouldn't price go up? Right? If you are distributing and your inventory is short, which means you don't have ideally, right? Ideally, okay? So we are looking for longs, okay? Because inventory is short. Now, if inventory had been long, say it's all above the close, we'd be looking for correction back down, okay? So now you're kind of orientated, right? You've taken a look at the map of the city and you know what neighborhood you're in, right? You're in this neighborhood as opposed to this neighborhood, right? Then we go and we zoom in to the map of the neighborhood, okay? And these are all, and then you go and you mark out all the stops, the lower and the upper stops, right? And this is in that document that I gave you guys. I should redo that document, okay? Now we look at the point of control from the overnight and the point of control from yesterday are pretty much lined up. What is the practical use of this information? This means that business is the same as it was at yesterday's close, and now it's changing a little bit because we are above yesterday's close. But it also tells us that the majority of our inventory is priced here. Okay? And we probably want to try and sell it up here. We will sell it here if we run out of buyers. We don't have any trouble selling it at 66 if we're long at 62. We'd love to get 70 for it, but we don't have the buyers right now to do so. Still with me? Yeah, and buyers create support because they're trapped short. The trapped shorts are always the first to buy when a market goes down. When a market goes up and then comes down, right? The first people to buy are trapped shorts. Then the large wholesale traders buy on top of them. We buy on top of the wholesale traders because we see price stability. These two parties create price stability. So I call these the smart money shorts, and they come in and they're bid to cover, right? So they're buyers here. Wholesale goes, hey, these idiots are short, they're buying it back, let's jump them and buy on top. So if this is $5, wholesale's buying at 6, we buy at 7. Now what happens in a market where there's limited supply? The liquidating inventory up here, there's only so much of it. It's not infinite. See, and a lot of stock traders have trouble trading futures because in a stock, especially small cap stocks, penny stocks, the supply is infinite. That's why penny stocks, they run for one day and then they keep going down lower and lower and lower and they never come back. Do you guys ever notice that? Like you'll see some deal, it'll blow off, it'll go up, it'll be up for one day, it'll trade like $400 million worth of stock. The insiders sell all their stock and then it collapses, right? So you guys are used to that as penny stock traders, but that doesn't happen in ES because ES has a much higher cost basis to do business than in a penny stock, okay? So let me redo this now, right? You've got the trap shorts coming in, right? Then the wholesale long. So the trap shorts come in at 5. Wholesale longs. Now people will ask me why these shorts are the first to buy. They're always the first in the door because they are closing a transaction. So if they're short at 8 and the stock's at 5 and they need to buy 100,000 shares, they're going to come in and start bidding at the lows and starting to take up that supply. The wholesale longs will build a position on top of that. Then we come in, right? Now, the fourth set of buyers, right? The fourth set of buyers that cause that big move, sometimes, yes, Raj. So the fourth set of buyers are the people who shorted in this area. The people who shorted 5, 6, and 7, they shorted 5, they averaged up at 6, they averaged up at 7. At $8, they think, they're like, oh crap, we got to cover. And then they are the ones who push the stock up to 10, 12. That's why after a sell-off, generally in these markets, the price goes higher than it was before the sell-off. Our overnight low, that's those are the people who got trapped short underneath that G low yesterday, right? So that's where our support is, and it's been one time framing up, trend up since then. This little J period that's what happened when the dumb money came in and decided, oh, we're going to cover. Now, the good thing is it's a slow night, so those who have inventory are selling into it here. Now, Jiraj, once you see this breakdown, now you know how to trade it, right? So now what we do is we go and we get our 1 minute chart. And I haven't done any balance zones or anything, so I'm going to start from scratch just to show you how to do this. Every morning you do the same thing. Once you start doing the same thing every morning, it's going to become a routine. And once you have a routine, you will only do business when that routine tells you to do business. Do you guys get why we have trade setups and why we do the same boring thing every day? So we come in, it's like a baker. He comes in and he does the same thing every morning. Like they go into work at what, 3 in the morning, 2 in the morning, and they start baking. So it's not like one day he's going to go, oh, let me just try baking bread using sand instead of flour. Does that make sense? Now, Joe at the top is selling competition, right? The sellers will start to compete. The size sellers, which are the smart longs. Yeah, you can. Dave, you do the same thing every day, brother. You do the same thing every day. And once you have that routine, then you're not looking for trades, right? How many people do I talk to every day? They're looking for a trade, they're looking for a trade, they're looking for a trade. Like, what would you do here? What would you do here? What would you do here? I'm like, I'm going to do nothing. They're like, huh? Well, because my trade setup, the conditions under which I execute are not present. So why in God's name would I execute? Doesn't makes no sense. Right? If I buy when it goes on sale and it's not on sale, why am I buying it? Right? So we do the same thing every day, right? Yeah, and try not to multitask, right? Multitasking is great once you're really good at something. When you try to learn, just focus on one thing, right? So let's go find a balance zone, right? I'm also going to set VWAP. VWAP, I set my VWAP at the Globex Open, which is 11 o'clock UK time, 6 o'clock New York time. My VWAP's now anchored. Okay. Now I'm going to look for balance. Okay. Now, when you look at this chart, do you guys see something? Do you see this zone here that we had 47 to 57? It kind of continued through, didn't it? Right? But I'm just going to leave that for a second. I'm going to try and find a nice fresh balance zone here. Look, London's already opening. I've been talking for a whole half hour without even doing the balance zones. Right? So if you're short, you're looking for probably, I'd say, 62, just where VWAP is, right? You could still use yesterday's balance zones. That's not a problem. I'm just trying to find. See, there's a seller. See, look, big seller. Big candle, big seller. See that? That is one large sell order, right? So London opened, right? One big sell order, boom, down. And where are we going to come? We're going to take the lower stops and we're going to come into cost basis. So we took this little part of our inventory, right, and we sold it up here. Now we put it on sale right back to where we started. We're still at distribution. And we know where the seller is now, right? Now you know that there are sellers here. The top of that L period high, just under 66, that's where the sellers initiated and knocked the price down because they're competing with each other. So you got discount zones and profit zones. Pretty simple. I don't understand. The bigger the candle, the bigger the order. So when the candles are small like this, business is slow. Here, business gets really fast, really quick because London loves to come in and try and get us lower, right? So if you're doing a look below and fail and you're buying the 63s, right? Say you're trying to buy 68, 63, 68, 64, right? If it holds, I don't even have my other Sierra chart open. Hang on. Right? If you're buying this area here, let me just open up. I might miss this trade because I didn't have my trading account open. Right? So if you're long, you have a perfect look below and fail here. You see that, Jiraj? Right? Simple trade, look below, fail. Now, why did we do the look below and fail? Why is that trade working? Because that candle that started at 65 half and took us under 62, that order is done. It's completed. So the market goes up to look for sellers at a higher price. Do you get that now? So you try and buy, if it holds 62, we can go long. VWAP is there, it's kind of helping us. So we can buy a little here, right? And let's see if we hold VWAP. If we don't hold VWAP, then you know the trade's not going to work, right? So you're building a little position here. Your stop is under 62, right? There's a business reason why you're taking the trade. The business reason why you're taking the trade is that the seller does not need to sell under 62 anymore. If the market breaks 62, then your inventory is not priced correctly and you must exit the business situation. It's that simple. Right? Hey, Eris, what's up? It's one sell order, Jiraj, or one group of large sell orders that takes the market under 62. Once those sellers orders are complete, right, the market did in fact rotate higher. Now, we know that the top of the candle is where the seller initiates. So that's why they sold into it at 64 and a quarter, right here. So now you know they stopped selling at 62, 61. They're selling at 64 and a quarter. It's a slow night. So if you are going to if you miss that first look below and fail, like I did, right? The dream would have been to buy 62 and 3/4 and sell 64, but that didn't work because I didn't even have my trading software open, right? So now I'm going to sit and watch. Now the candles, if they get small and they go back and forth over 62, then I know business is slow. And that if I'm looking for a look below and fail, I might have to sit in that trade for a little while until more customers come in. Get it? So that's how you gauge right? How you analyze how a market is trading so you have some sort of situational awareness. So you're not just going, oh, I'm buying, because they get FOMO, right? You actually understand what's going on, right? Once you understand what's going on, you're not going to make dumbass trading decisions, right? Or you're not going to have these crazy pie in the sky expectations, right? You see the candles are getting smaller. If I'm long 63 and a quarter, right? I might have to sit in this trade for a while. And if I'm long at 63 and a quarter, well, I should put some sell orders out just at 64 and a quarter and see if anybody's willing to buy them. Because if they're not, then I'm holding inventory that's not priced well. Does that make sense to you guys? There's a business reason why you take a trade. There's a business reason why you get out of a trade, right? And that is because the business reason that you took it is no longer present. It's like those people who buy a whole bunch of patio furniture from China thinking that it's going to be a great summer, and then it rains all summer and nobody buys any patio furniture. What do? They blow it out, right? They get rid of it. Yeah, so if you are a scalper, the market's telling you, chill the hell out. There's no scalp just yet. The candles are getting small. That means business is getting slow. So if you do take a trade, right? If you do take a trade, you're going to have to wait. And look, here's the thing. If it doesn't pop and the seller keeps moving lower, like they're here and then they're here and then they're here, it might just take out this low. I don't assume anything until it happens. So I'm a look below and fail trader. This is not looking like a great trade right now. I got to let them clean this up. Once they clean this up, which means take out the sellers above who are selling into it, once this is clean, it'll go like this again because inventory is still short. If inventory is short and there is no significant correction, that means the market's trying to tell you something. Get it? So now I'll just sit and watch. Candles are small. So when the candles are small, there is no reason for you to be all anxious and nervous. Like you don't have to do the where's the trade, where's the right? You guys are always panicked looking to find the trade. Just sit and watch, right? Be try and emulate the psychology of someone who doesn't need the money. Because as soon as you get desperate and try and get the market to give you money, it will rob you so quickly it will make your head spin. See, Slippy, you were right, right? It didn't pop. It started to go sideways. The sellers are moving lower. See? They were here, then here, then here. Now they're here, right? So why in God's name would I go long? Now, if I was really on the ball, I could have shorted 62, put my stop at 63, and tried to cover 59. But I was walking you guys through the long trade and why the long trade I wouldn't take. As you get more and more advanced, you'll just flip to short. Right? So you're not just flipping to short for no reason. You're flipping to short because you see the top of each candle getting lower and lower and lower, which means the sellers are competing and pushing price lower to get rid of the inventory. Does that make sense? This way you're not long and adding to a bad position. Because what happens is traders will be long 62, 63, they'll add 61, they'll add 60. Next thing you know, we're at 55 and they've blown up their account. Sound familiar? Let's see if we hold 58. See you, Tib. Have a good one. You'll see this happen over and over and over again, right? Sometimes there is no trade for us, right? If I was on the ball as a short seller, I would have taken it. But frankly, I got to tell you, this morning, I'm a little slow with my execution, right? I haven't really traded yet. I'm still kind of watching and waiting, right? And I think what's going to happen is I, th- I think until the Fed, the Globex sessions are going to be kind of slow, and then they're going to get busier after the Fed. That's what I think anyway. Well, let's see. I mean, I've never been good at telling fortunes, but let's see if I'm right about that. Say you went long at 60, right? Say you couldn't wait and you pulled the trigger, right? And what I try and do in this room is, okay, the perfect trades are the look below and fail from one to another. But I know people do trade emotionally and blah, 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 right? So if you're long here, your stop is going to be the bottom of that candle. Or if you have a larger account and you're long here, this is your warning level, and then you can use 58 as your stop. Okay? Your target's going to be just underneath VWAP. I know, Dave. I know, brother. 61. Let's see if we can get up and print the 62s. See, look, see how there's a seller at 61? See those three candles have the same top. You don't need any fancy software. Don't let people try and tell you that you need order flow software. That is the biggest BS I've ever heard in my life. What you are watching here is order flow software. A 1 minute candle is showing the transactions. The transactions are a result of the order flow coming into a market, right? And then the inventory in the market matching up with that order flow and transacting. That is order flow trading. This is order flow. This is order flow. You don't need any special software, any special DOMs. You don't need any of that stuff. Don't let people sell you stuff you don't need. Watch the offer. See how the offer is lifting above 62 now? So we ran out of supply at 60. We ran out of supply at 60 and a half. So remember I told you if you were long at 60, put a sell order out at 62. take the 2 points. Your next seller is going to be at 63. Let's see if we can lift above VWAP. There's the 63, no print yet. See, there's a seller at 62.5. Did you see that? We couldn't trade here. The seller is here. Get it? Rewind this later, Jiraj, and you will see where that seller is. You knew that they were going to be here. You knew that there was going to be a seller at VWAP. There they are. And now they're pushing price back down here, right? Globex, a lot of people think Globex is slow and boring. Smart people learn from this, right? The traders who are consistently blowing themselves up and are the bank machines for the rest of us, the food for the rest of us. They're the ones who are jonesing for a trade right now. They're the ones who are going in and out and in and out and trading 20 or 30 times. Smart people, smart money will watch something like this and then put an execution plan around what is happening. If they don't have an execution plan for what is happening, they will not execute. Because that means you're just throwing money away. Right? You don't need to know anything. You need to know where the sellers are and where they stop selling. And will it go back and forth? And once it's clean, it'll go and do this and take that inventory that is acquired here and try and sell it here. That's how markets work. There's nothing, there's no secret algorithm. There's none of that crap, right? It's a business that involves the distribution of inventory. That's why they call it a market, right? What is my usual holding time? Depends on the order flow, right? If I was long here at 63 and it broke there, then my holding time was 2 minutes or a minute and a half in this particular case. Say if I was long here at 63 looking for this and it took out 62, I'd be out of the trade. So a minute, 2 minutes, right? If the market, if the business reason that I went long at 63, if that's gone, Slippy, then why would I be in the trade for a long time? Unless I'm trying to build a position, which is a completely different kind of trade than a scalp. Right? Say I was going, okay, you know what? This is where the cost basis is. I'll try and build a position, buy some at 60, 61, right? Buy 15, 20, 30 contracts here, and then try and sell them every 3 ticks up. But if it breaks 58, if it breaks 59, that's my warning level. And if it breaks 58, I got to get rid of the inventory. But you have to have an account that can take that kind of a loss. That's a business expense. So there are trades for traders who have no money, who are using funded accounts. And then there are trades for traders who have more capital, more skill, and the ability to manage a trade. And the worst thing a scalper can do is turn a scalp into a position trade, because the business reason for that trade is gone. You're just holding on to your position just because you're being stubborn and you don't want to admit you're wrong. Professional traders, yeah, depending on the time frame, Michael. So if you're a wholesaler that trades, if you're running like thousands of contracts through a spread, yeah, you'll try and get most of your inventory out the door. And it depends on the kind of capital they're trading and how their business plan is. So if I'm a swing trader and things start going against me, right? It's the smartest thing to do is to manage your risk with size, right? If you're in a trade and it starts to go out against you, shouldn't you start taking risk off instead of adding risk? Does that make sense to you guys? Because here's the thing about trading. If I waste and blow up all my money today, how am I going to be in business tomorrow? Because you guys like to blow up accounts, right? You guys love to blow up accounts and then commiserate about it and go, oh, I blew up my account. Oh, you're being transparent. Oh, how wonderful for you. Let's pet you on the head, right? Retail traders love to blow up accounts because they love commiserating. If you're working in this business and you blow up client accounts or you cost your firm money, guess what? Nobody's going to hire you. Do you guys understand that? If you guys did what you did in the business, you'd never get on another trade desk again because you're known, right? You're known as you're a cost center. All you're going to do is cost the firm money. So if somebody came to me and said, oh, I just blew up my last 6 accounts, will you give me a job? I'm like, I wouldn't even hire you to clean my bathroom. Why the hell would I give you a job managing money if you show no discipline? Guys, do you get it? Is that a little bit of reality? Right? You know? You don't get second chances in finance. Once you're known to blow up accounts, once you're known to make bad decisions, that's it, you're done. You don't come back from that, right? Because there's thousands of people who will take your investors' money. Thousands. You don't come back from that. How come there are plenty of professionals who ruin their funds? Michael, what you do is you're looking and you're focusing on there are professionals who blow up their funds, right? How many people blow up their funds versus how many people make money for their clients? Have you read the Wall Street Journal lately? You're looking at outliers. Do you understand what I'm saying? There are people who, because human beings are human beings and their egos run their business. Look at, what's that guy, Wong, who blew $30 billion in a week by going around and lying to prime brokers. But he's in jail, right? So if you look at Bill Wong versus Steve Cohen is relaxing in his mansion. Bill Wong's in jail. Do you get what I'm saying? You're looking at the one guy out of 1,000 or 3 guys out of 1,000 that do badly or blow up. Do you understand? And you ask those guys after, how difficult is it to get going again? For retail, it's the other way around because retail could care less, right? Retail traders, when they first start out, are greedy. They are greedy. They don't respect the money. They have no respect for the business. They've watched some idiot on YouTube, right, saying that he controls the market or some crap like that, and they think that they have a God-given right to come into the market and make money. And then they get eaten for breakfast. Now we're looking at 68.56. Let's see if we can take that. That's a new low. And if we take out 56, my big interest is 54 quarter. How does it react at 54 quarter? Big inventory correction when London opens. Took out the whole range in 1/2 hour bar. There's 54 quarter. To the tick, I might add. How should you respect the money if you have a funded account that costs us $15? Go do something else. Don't trade. Brother, I'm telling you, if you're asking that question, you got no business doing this. You've got the wrong mindset. You see what I'm saying? You shouldn't be trading, right? If it's just a joke to you, right, and you never intend to make money, then it's like a video game, right? You just keep resetting your $15 thing or $30 thing. You're not taking it seriously. And that's okay. Some people come into trading and it's like, you know what? I'm going to learn how to trade, and then tomorrow I'm going to learn how to make banana bread, and then I'm going to take a macrame class, and then I'm going to take an underwater basket weaving class, and then I'm going to learn how to, bake bread. That's cool. You don't have to take it seriously. It's up to you. You're a human being. You have choice, right? Top of yesterday's, yeah, to the tick. I told you, 68.54 quarter. What's it going to do at 458 quarter, right? 68.54 quarter, right? I don't know if we leave a single rush. Let's see. It's going to be an interesting night. It's different, right? Yeah, I don't mean to be a prick, but if that's the attitude you have, go do something else, right? That's okay. If you want to treat it like something that you want to do, then be intelligent and use the prop firm to learn, right? It's great to have a prop firm so you're not losing your house and you're not blowing up your IRA or borrowing money from friends to trade. I've seen horror stories, where guys, like, I've seen guys on Twitter, like, I lost all my money, then I borrowed 50 grand. I don't have anybody who's going to loan me $50,000 after I threw away 100 grand. I don't know about you, but that's why prop firms are great. Well, Michael, I'm just going to tell you something really quick, and I hope you take it to heart. How badly do you want to be successful at this, right? You'll take all those excuses and you'll throw them out the window and buckle down and work, right? If you're at 82 short, I'd be covering some here, and then I'd put some bids down underneath 50, 52. Use your buy orders, right? Now, I don't know if it's going to break 54 and a quarter. I think in a normal market we would break it. The fact that we hit quarter half to the tick is, that's suspicious. When a market hits one of my levels to the tick to the penny, that makes me suspicious. Let's see. One signal? Yeah, there we go, Baran. Right? So, Michael, if you decide to stick with it, take all the excuses, throw them away, come visit us at the Trading Syndicate. If you want to learn how to do this properly, I'll be happy to teach you. I do not mollycoddle traders, though. I don't pet you on the head when you make mistakes and go, "Oh, that's okay." Right? Because that's not how I was trained. When I made mistakes, people threw phones at my head, screamed at me, and fired me, right? So I grew up in the business So we don't take excuses. There are no excuses. If you want to learn how to trade, if you want to learn how to make money, if you want to learn how to keep your money, come with me if you want to live. We're at thetradingsyndicate.org. We have all the resources to help you. We have an AI trading coach. I do one-on-one lifetime mentoring. If you're just starting out, you can just come in the room. We keep the price low so people have time to learn. Okay? Come check us out if you're serious about it, right? Our AI coach will help you with your trading psychology. It will help you with setting up setups, all sorts of interesting stuff. It's been trained from professionals, so it doesn't just go around and grab information like a vacuum cleaner, like normal AI, only trusted sources. But yeah, if you want to, if you want to learn how to do this and make a living and be profitable and do business like a responsible business person, come visit us at the Trading Syndicate. And I thank you all for joining me. Have a wonderful night. Trade safe out there. And don't take candy from strange market makers. Thanks, everyone. Bye for now.